Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Today we'll be focusing on the effects of transactions on assets, liabilities, and capital. Now, these three items are the components of the balance sheet. So therefore, our topic could read effects of transactions on the balance sheet. At the end of the lesson, you should be able to identify how a range of transactions, both cash and credit transaction, affect items on the statement of financial position, basically the balance sheet. Now, in terms of transactions effect, note that a transaction affects two items. In terms of the effect, there may be an increase or there could be a reduction in the item that is affected. Now, let us move into looking at an example. So we have a list of transactions located on the left, and there is a column to your right that is divided into three columns, and we'll be using these to indicate if it is assets that is affected, the name of the asset, and if there is an increase or if there's a reduction, liabilities, if that item is a liability, it will be listed under this column. And if it is capital, we will indicate whether or not there is an increase or decrease based on the transaction. To the left, we have a list of transactions. To the right, we have a main column representing effects upon. That column is divided into three. We have one for assets, one for liabilities, one for capital. So if it is that there is an asset that is affected, we're going to list this under asset, and then we indicate whether there is an increase or decrease. If there is a liability that is affected based on the transaction, it's going to be listed under the liabilities heading and indicating if there is an increase or decrease. And if our capital is affected, we indicate whether or not there is an increase or a reduction. Now, in assessing the transactions, we're looking at it from the business end, from inside, internally. We are not in any way looking at the effect into another business. So we're not going to fast into that business. We're going to mind our own business. So we're going just looking at what is happening internally. Okay, our business record basically. So you can think about it. Say this is your business, and you're looking at the effect on the items within your business. Okay, bought equipment on credit from Quartz Limited. Now, what are the items affected by this transaction? We have equipment that is purchased. So equipment is affected, but guess what? This was purchased on credit. So it means that the business is owing someone. Who is the business owing? Quartz Limited. So the two items affected are equipment and Quartz Limited. Now that we have identified the two items that are affected by the transaction, we need to put them under the respective heading to indicate what category of item that is affected. The first one, equipment, is an item that the business owns. Yes, the business purchased this, so it is owning it, and it therefore means that it is an asset. So under asset, we're going to put equipment. Now we need to indicate whether or not this item increases or decreases. Because this was purchased by the business, this is coming in. This caused an increase in the value of what the business has for equipment. So we use a plus to represent that. The next item is Quartz Limited. Quartz Limited is the business that our business purchased the equipment from. This was not paid for, so it means that this is a liability. So under liability, we put Quartz Limited. Now, we have to indicate whether there is an increase or a decrease. Now, if you think about it, the fact that your business did not pay this individual, there is an increase in the value of what your business is owing to that particular business. So there's an increase in the value of what we are owing to Quartz Limited. So that is a plus. All right, let's move into the other transaction. Winsome, a debtor, pays us by check. What are the two things that are affected by this transaction? We're seeing Winsome, who is a debtor. So Winsome, the debtor is paying us. So debtor there is affected, but the specific debtor is Winsome. And we have to indicate that the particular name of the debtor, because we want to know whether or not this person is owing us at the end of the period, or we need to know the value if they're owing us at the end of the period. So we have to know the specific individual. This person pays us by check. So the other item affected there is check. Once check is affected, that represents the bank account. So we're going to use bank instead of check right there. Now that we have identified those two items that are affected, let us put them under the respective category. Winsome is a debtor. Debtor is an asset. It's an asset because the money that this person is owing us is our money, our business money. So therefore, it is owned by the business. So that is an asset. So under asset, we have to indicate the specific name of that individual, as indicated earlier. In bracket, I'm going to put debtor. And we now need to indicate whether there's an increase or decrease in the value of what the person is owing to us. Now, this person pays us some money, some of what is owing. So therefore, whatever is owed by this person decreases. So whatever is owing to us by this individual decreases. So we're using a minus to represent that. This person pays us by check. And remember earlier I said that once check is affected, it is your bank account. Bank is an asset. So we're going to put bank under asset as well for this transaction. Winsome paid us using a check. Is that an increase or a reduction of what we have in our bank? We have received this check, so therefore it is an increase. So we're going to use a plus to represent that. All right. So from this transaction, you're seeing that two assets are affected. Once you have two assets affected, one will be increasing and one decreasing, like you're seeing in this, where the debtor decreases while the bank increases. Let's move into C. Proprietor takes cash out from the bank account. The term proprietor there means owner. So what this is saying is that the owner takes cash from the bank. So the two items affected are cash and bank. Now, what category each item is to be listed under? Cash is owned by the business, so therefore that is an asset. So under asset, we have listed cash, but we need to determine whether or not there's an increase or a reduction in cash. This cash was in the business bank account. So the proprietor went to the bank, pulled some cash from the bank account to be used in the business. So therefore, that's an increase in cash because the cash is coming in to the business. The other item, bank, yes, is an asset. And the money came from the business bank account. So therefore, that is a reduction in bank because the owner pulled that cash from the bank account. Next transaction, owner's motor car brought into business use. Owner's motor car brought into business use. Basically, it is saying that the owner uses motor car to invest in the business, right? So the items affected by this transaction would be motor car and capital. Why? The owner uses personal car as an investment in the business, so therefore capital has increased. So under capital, I'm going to put a plus to represent increase. And the other item is motor car. Motor car is what is own what is owned by the business. So therefore, that is an asset. So motor car is being listed under asset. Now, is there an increase or a reduction in the value of motor car in the business? This motor car came into the business. It means that the value of what the business has is now increased by that value of the motor car that is brought into the business. That is a plus. Next transaction, Shay, a creditor, paid in cash. Now, what we're seeing is that Shay, which is a creditor, and remember, creditors are persons that the business is owing, is being paid in cash. So the two items affected are Shay, the creditor, and the cash. We now need to put them under the respective category. Shay is a creditor. Creditors are persons that the business are owing for goods or services supplied to them. So because this is an amount that is owing by the business, this item is a liability. So therefore, we're going to put Shay in bracket. I'm going to use creditor to indicate that this person is a creditor. And we now need to indicate whether there is an increase or reduction in the value of what the business is owing to this person. Now, in terms of paying off a creditor, once you pay someone some of what you're owing, or possibly all of what you're owing, that causes a reduction in the value of what you're owing to that particular individual. So therefore, we're going to use a minus to represent that. The cash was used to pay the individual. Cash is an asset. It is listed under asset. In terms of the effect, because the cash went out of the business to be used to pay this individual, then of course, the cash decreases as well. Now, you may be saying that you're confused, but guess what? As I said earlier, we are not too inquisitive. So we're going to pay close attention to our business and our business record only. We are not going to pay attention to what is happening in the other business record. We're thinking about our record and our record only. So for example, the creditor that we are owing, we don't care about the creditor's book. What we care about is the value of what we are owing to this individual, whether we are owing more or we are owing less. Okay? And in terms of the cash, remember the cash went out of our business, so therefore there's a reduction in the value of cash that we now have in the business. Next transaction, returned machinery to Truckers Limited. What are the items affected? So we are returning machinery that is affected to Truckers Limited. Basically, if we are returning the machinery to Truckers Limited, it means that machinery, which is an asset, so I'm going to put that under the category asset, machinery, has decreased. So therefore, we're going to use a minus to represent that. Decrease because that is going out of the business. So this machine was purchased originally by the business. Something is wrong. It is now being returned. So it's going out of the business. That caused a reduction in the value of machinery in the business. Truckers Limited, no, it means that the business had purchased from this person. So therefore, this person is a supplier of the machinery. It means that in this case, originally it was purchased on credit. So it therefore means that this individual is being owed by the business. This individual is being owed by the business, and because we are owing this individual, it is a liability. So under liability, we are going to put Truckers Limited. Now, is there an increase or reduction in the value of what we're owing to truckers? Because we're returning the machinery to truckers, it means that we don't have to pay for that machinery. So therefore, there is a reduction in what we are now owing to Truckers Limited. And the final transaction, borrowed $400 cash from Dawn. So the two items affected are cash, which was borrowed by the business, and this was borrowed from Dawn. All right. So basically we got a loan from Dawn. So Dawn is affected right there. Let's put them under the respective category. Cash is owned by the business. That is an asset. Cash. Is there an increase or decrease? Because we had borrowed from the individual, this person gave us the cash. There's an increase in the value of cash that we now have that is represented by a plus. And we got the loan from Dawn. So therefore that is a liability because we are owing, and we have to put the specific name for the liability, which is Dawn, because we want to know that, yes, we're owing X amount, but who are we owing it to, right? Now, in brackets, I'm going to put loan to represent loan account. And we now need to determine if there is an increase in the value of what we're owing to this person or a reduction. There is an increase because we just received that loan from the individual, so we're owing the person more. So we're going to use a plus to represent that. If it is that we are repaying, it means that the value would decrease. So we are finished with the transactions, and I'm going to highlight something. Bear in mind that if you are doing the balance sheet, remember these items are balance sheet items. And if you're doing the horizontal balance sheet, it means that it would be a T. Basically, your assets on your left and your capital and liabilities on your right. So I've used the red there to highlight the T, splitting your assets, your liabilities, and capital. So again, assets on the left, liabilities and capital on the right. Now let us look at the effect. When there is an asset that is affected and the liability affected, both items must be either increasing or decreasing. So we have two cases where assets and more than two cases where assets and liabilities were affected by a transaction. So here we go. This is one where we're seeing that assets, the asset equipment and the liability, which is Quartz Limited, were affected. Asset is on the left, liability is on the right. But we're seeing where both items increase. Here's another case where we have an asset of cash, the asset cash that is affected, and there's a liability, which is a credit that is affected. Look at the effect. Both items are decreasing. Here's another case where an asset is affected and liability. Look at the effect. Both items decrease. And here's a final one, asset and liability. Both items increase. So whenever you have an asset and the liability that's affected, the effect is the same. Meaning is either both are increasing or both are decreasing. In terms of if you have an asset and capital that is affected, it means that it's the same effect, whether both would be increasing or both decreasing. In this case, we're seeing that both items increase. If it is that you have, let me clear this because I don't want to cause any confusion. Let me put back the T to represent the split. And pointing out the asset. When there's a transaction that affects two assets, like in this case, one will be increasing and one will be decreasing. Here's another case where we have an asset that two assets affected by the transaction, two assets affected by the transaction. Look at this, one increases and the other decreases. Okay, so basically what I'm trying to say is that because when you have the equation, the balance sheet equation, assets equal to capital plus liability, you have to ensure that the effect that you have on the left with your asset is the same effect that is on the right. So if it is that you increase your asset, it means that either your liability or your capital will be increasing. If it is that you have two items from one section, one side that is affected, like for example, your assets, it means that one will be increasing and one is decreasing. Because at the end of the day, your total assets must be equal to your total of capital and liabilities. And that takes us to the end of this lesson on effects of transaction on the balance sheet items. Join me in another session where I'll be looking at redrafting a balance sheet after some transactions have taken place.
Like, share, and don't forget to subscribe.